Oh, Alante on here too, I see. What's that word? How we doing? How we doing?
Yes, sir. What's good, family?
What's up, truck driver? What we got going?
Shoot, man. Let me turn my video on. I'm out here right now as we speak, man.
Look at him, man. Look
Yes,
at him.
sir, man. Yes, sir.
How you doing? Talk to us, family. How you doing?
Oh man, doing good, bro. Doing good. Just out here trying to get adjusted to my new schedule. Cause I've been driving obviously for like the past 6 months, but I started with a new company, so I'm just trying to get used to the schedule and all that.
Yeah.
And just like really figure out my trading style for real. Cause I was trying to do you know, being on the road, watching the charts while I'm out here, and day trade at the same time. And I'm like, bro, it's so tough doing that because it's like you ain't really like I'm seeing how y'all is
Mhm.
like y'all literally on the charts all day, like watching the market all day, and I'm like, I don't really be having time to do that. So
Nah,
really
bro,
just
don't
just trying
don't
to
feel
figure out
like that. We
what
ain't
worked
all
for
like
me.
Keys.
that.
Talk to him, Keys.
We ain't all like that, brother. Trust me. I'm like you. I'm in the field all day, every day. So just pay
Yeah,
attention to the chat, but also just watch the stocks that you want to be involved in heavy so that you know what you're trying to get in. You know what I mean?
right.
Like
Yeah,
like I watch like key stocks and I'll be like, okay, well, I can't be on there. Well, I know if the stock drops to this level, I'll just set my alert. Like for example, BE, I was
yeah,
watching BE all day today. Boom, broke 300, my alert set off. You know, we just gonna see if it does.
yeah.
If it
No, for
hit, but
sure.
don't feel alone, bro. It's all good, man. Sometimes we miss the plays. I think I missed the AIS play that they put in
Yeah,
earlier. That's
yeah, and
all good.
that's the thing I be having to like kind of like get out my own way with because like I be having FOMO, like so like I be like seeing what plays y'all in, and like either I'm you know um some minutes late, hours late, and it's like by that point it's like the stock didn't already made the move or did what it needs to do. So like
Right.
that's another thing for me too, bro. Like just trying to make sure I'm in stuff that's like that makes sense.
Yeah.
Like prime example, like I ain't never really been like a swing trader or like a long term trader. Like I said, I was mostly like trying to do the day trading stuff. But now, like that play that you had put in, Nate, the Netflix,
Yeah.
I think it was 100 call out to next year,
Yep. March.
and yep, and I'm seeing how it move. I'm
Mm-hmm.
seeing how it move, and it's like, you know what I'm saying? Like where I'm at now, I'm like that make the most sense. Like how that contract move versus me doing zero DTE.
Yes.
You know what I'm saying? And I'm
Yes.
figuring out like, bro, like with like how I'm actually trying to, build this trade lifestyle for myself. I'm like, bro, zero DTE is just not that's just not where I'm at right now. You know?
It's not only where you not at, bro. We was gonna talk about that today. I actually had that in the notes. We needed to speak about that because there's been a rise of dialogue around day trading in 2026. And the question is out there for all investors and all traders,
Yeah.
is day trading still worth it?
Mm,
And
that's a great question.
I'm like, man, this question ain't never popped up before. But then when you start realizing all of the systems in place, all the algorithm, all the bots that are being in place. Bro, there are so many different people that got quants with their trading style that they got basically AI robots that do their
Yeah.
trades for 'em, where people not
Yeah.
even really day trading no more. So it kind of puts you at a disadvantage if you a beginner, you trying to learn how
Right.
to do zero DTE and you trying to really just kill this market. And you like, bro, this shit ain't just it's not. Man, I've been in there. You know what I'm saying? I know you
Yeah.
probably done looked at it like
I can
zero
tell you
DTE,
too.
like I'm I think this is going right, and it goes south, and then you get out, and
Yeah.
you like, bro, fuck, I should have just
Facts.
Then you held on too long, now it done dipped, and you like, bro, what is going on?
Mm.
You know what I'm saying?
Right, right. Or
KB, you
or
want to
or
speak
you
to
didn't
that?
you didn't got out too early because
Yeah,
it didn't drop. You know what I'm saying? Farther than or went the complete opposite way where you thought it was gonna go. So
exactly.
yeah, bro. It's yeah. That's actually a great point you made too. Like just like with everybody else kind of like using this AI or what I'm
Yeah,
saying, like more so like technology to kind of get them that competitive advantage when it comes to the market, bro. Like
exactly. And
that
you
that's
see, and
big.
you sitting here trying to trade your ass off. You trying to figure it out. And I'm trying to. I think I should buy right
Man.
here. And this niggas that's running laps around you, bro. And
Yeah,
that,
yeah.
Yeah.
that's
It,
and that's I'm gonna
Easily.
let KB go here in a second, but that's the reason why I wanted to talk today. It's like that's the Roman question in the trading and investing community. You you really being put at a disadvantage now, but you really
Mm,
gonna be to put it at a disadvantage over the next couple months and the next year. Why? Why I say that? Because once they um 24/7 is trading stuff which they're working on. Once you're able
yeah.
to trade Sunday nights, Saturday nights, once you're able to trade Friday night
They
at
working
two
on that?
o'clock, once you're able to do that, you're gonna go to sleep
Ooh.
Friday thinking you in a good
Yeah.
trade.
Yeah.
Friday night when everybody else is trading, you getting your ass kicked.
Yeah, that's finna shake the game up, bro. They finna have the market open on the weekends.
They about to have the market open on the weekend.
Oh
So
man.
it make you ask
Yeah.
the question like, bro, is this day trading shit even really worth it? I'm glad Tev
Mm,
is on here now, but that's been the question roaming in the trading and investing community. And people are like, how do you defeat the system when a system is rigged against you? Bro, one thing
mm,
about it, bro, is we black men, bro. We've been
yeah,
defeating the system our whole life. You know what I'm saying? So to defeat the
that's a
system,
fact.
that mean what? That mean we got to figure out a different strategy, right? We got
Hmm.
to figure out different ways to protect ourselves, and we got to figure
Yep.
out different ways to take profit, and we got to have different targets, bro. Like if we
Hmm.
doing
Yep.
day trading like they are, like I'm telling you, bro, you get in the day trade Friday at afternoon, and you like, man, I'm gonna hold this over to Monday.
Yeah.
You holding it over to Monday while people are day trading on Saturday.
Yeah, bro. Yeah. Yeah.
Now what? You know what I'm saying? You sitting there
Mm,
sick, like, bro, this some bullshit. This shit rigged. So that's why I always come back to my strategy. Bro, buy quality assets, bro. You're not gonna
yeah.
see, the top dogs like your Micron. You'll probably see them down for a day or two, like we just seen. But in the end game, if you think it from a long-term perspective, like that Netflix, we can be down right now for sure. But if you think it
Yeah.
from a long-term perspective, a year out, 2 years out, 5 years out. Bro, time is on our side, bro. Like,
Right. Yeah.
but the day trading, niggas be having work. Niggas can't look at their phone. Niggas sometimes miss the trade. Sometimes miss the plays. That's why the best thing to do is, bro, buy time on your plays,
Hmm.
buy them on a deep ass discount, and buy quality shit. We not playing with BBAI and shit. You know what I'm saying? I was looking at them earlier this year. I'm like, man,
Yeah.
they could really go crazy. You know what I'm saying?
Uh-huh.
And I was looking at Lululemon. I was looking at AT&T. I'm like, bro, these cheap ass stocks, penny stocks, like I can really like grab these at a low price, and if they 10x, I could be a multimillionaire. When you
Mm,
think like,
yeah.
bro, you spending too much time on these plays when it's these plays that's already working.
Yeah.
Does
So
that make
so
sense?
yeah, for sure. So my question to you is like how do you find discounted stocks?
Yeah,
How do like what's that process like? How do you usually go about it?
different question. I mean, that's a great question. So there's two ways to look about that, bro. If you on the investing tip, there's a
Mm,
process of how to find discount. If you on the trading tip, there's a process on how to find discount. Two different
got you.
ways. So when you're an
Yeah.
investor, you usually want to look at the fundamentals and you want to look at how hot, like how low off the stock is from its highs. So
Mm,
good measurements that we have are like 10%, 20%, 30%. If they 10%, 20%, 30% off of its highs, these might be good areas to buy a stock, right? So if,
yeah.
if a stock is at if the all-time high is is 1,000, and you see it was 1,000 last week, and it done dropped 10%, and it's down to $900, and it's a great stock, this might be a key area that I might want to grab. Some people wait to
Yeah,
20%, some people wait to 30%. It come down to 800, 700. I'm grabbing. That's just looking at a percentage standpoint. But
makes sense.
when it comes to trading though, you trying to find discounted stocks to trade for a long haul. You usually, me personally, that's why I say I like to find stocks when it comes to the options, or also even when it comes to the stock, they gotta be down a certain percentage for me to
Mm,
even be in them. And I'm gonna show you on Sienna how they reported earnings and why we all in that Sienna play, right? And the reason I do that with the trading side is because I like to buy, and I said this on my Instagram, I like to buy stocks when they're red, they're like a growth company, but they red that can give me a 2, 3x multiple if they really go. Right. And so the way I do it, like I said, for trading, I'm looking to see how far they off from their highs. It might not be 10%, 20%, 30%. Micron touched 1,200, 1,300, or yeah, 1,200, and it came down to 990 yesterday, right before earnings. 990 from 1,200, 300 points off. That might be a good area for us to buy. I think Alonso had called that out. But he's same on the stock side as well. Like I'm looking at the percentage, but then when it comes to trading options, you also want to look at the depreciation of the contract, right? One thing I love to look at, if you got Robinhood downloaded, Charles Schwab, Fidelity, if you have any of those downloaded, you can go and track to see what the option contract was when it was at its high, when the stock was at its high, compared to where it's at today, right? I do that all the time. So like if I see a stock of like 100 call for Netflix, right? That we talked about, that we in, right? 100 call for Netflix. Okay, I'm looking at it at its high when it was at 100, it was at 16, $17, right? I'm just throwing a number out there. But then I look today, it's at $4. Akil, is that a discount? It's probably a big discount. You know what I'm saying? So if I see it at 16 and then I see it today around $4, that might be a discount for me, right? Because I know if this goes and I got time on it, by the time it gets back to its break even, me buying at 4, I'm gonna get a double multiple on my investment. Does that make sense? I hope that makes sense. Hope that makes sense.
yep, yep. Yeah, that
That
make a
makes
whole lot
sense.
of sense, family.
Yeah, so you really want to find those stocks that are down off their highs, and you can take a percentage. I'm about to show us on the charts here in a second how to do that as well. And then KB, was you saying something about the day trading too?
Yeah, family. Akil, nice to meet you, brother. My name KB. But uh,
Nice meeting you too, bro.
the day trading, it used to be fun for a minute. You get a little high going. You be thinking, oh man, I can make a killing off this. If I put 1,000, 5,000 in this can
Facts.
10x and gets me a quick trade. It's fun doing those first two, three. Then you're gonna get burnt, bro. And you're gonna be
Yeah,
mad, sick. You're gonna blow the account. You're like, man, now
yeah.
I gotta start all over. You do all that hard work thinking you was cool and you blow that
Uh-huh.
account. Messing with a goddamn AT&T or something, like Nate was saying.
Yeah. No, you're not
So,
lying.
so yeah, just pick the winners and put time on it for sure. Don't be
Mm,
doing like no weeklies like that. It's not worth it. Unless you know it's a lotto, you willing to risk it. It's just not worth it in the end, brother.
for sure, for sure.
For
Yeah,
sure.
and I
Anybody else got to chime in on that? Ted, Volante, I know Brandon on here. I know J. Cole, Nigel on here too.
Yeah, yeah, definitely when you're trading, what I realized too is you definitely got to pay yourself out of your trades and don't pay yourself nothing, no $50, $100. Like if you really execute on a trade, like the best thing you could do for yourself is just pay yourself. And I'm switching my mindset around that too. Like I'll execute on a trade and I'll give myself like $50,
yeah.
$100, and the whole point of you doing that is really it's all about what you keep at the end of the day. Like
Mm.
Yeah, yeah.
the last call, it was no, I think it was 2 calls ago when Nate you brought on, I'm having a brain fart. What was his name?
Kyrie.
Kyrie, exactly. And he was talking about, put in that money towards your high yield savings because at the end of the day, you really need that safety net for,
For
if you
sure.
do take losses on stocks or if you do, want to buy a dip, right? So that's literally the most important thing, like literally paying yourself. That's what it's about.
Right. Yeah. Yeah. Absolutely. I didn't even think about it that way either, though. That makes sense.
Yeah, man. Yeah, man. So that's what we doing, bro. And remember, a lot of us on here, new to this game. A lot of us on here have been playing this game for a while. I'm never gonna tell you something that I didn't get burnt by. Right. I'm the reason why my strategy is the way it is because I took the long way. I done did this, I done did that, I done took a L doing this, I done took a L doing that. And I'm like, bro, something not working. I remember when I first
Mm.
started trading, I'm like, man, bro, this option shit cake. Like, I don't gotta work for it. Like, nigga, this shit easy. Like, I'm gonna just day trade. All I need to find is the support, the resistance, and then I need to learn these indicators, and I'm gonna do it like this and do it like this, and I'm gonna be on. And then you start seeing over time, bro, the game is not about sprinting, it's about a marathon.
Mm. Yeah.
It's not about hitting a trade today and hitting a trade this week. No, it's about hitting a trade over time for the next 5, 10 years.
Facts.
And,
Yeah.
and to maximize those gains, you got to put time on your side. Yes, we can hit a day trade this week for sure. It's cool to, man, day trade. If you know what you're doing, man, keep doing your shit. Like, keep doing it. But when it comes to over time and running a marathon, running your race being a marathon, you want to be able to execute all the time for a long time, right?
Yeah.
Not just short, hey, I just hit a quick trade, I'd have made a couple $100, I'd have made $50. And then one thing you're gonna realize is as you start growing your portfolio, you get more money to play with, you're gonna be wanting to risk a little bit more money. It ain't gonna be the same feeling risking $100 and getting $50. Now you're risking a couple G's and you making a couple G's. Now you're risking 10, 15, 20,000 and you making 10, 15, 20,000 in a day trade. Then
Oh
you
yeah.
really that's how you know it's like
Yeah.
that
It's a completely different ball game when you playing with money like that.
it's a different ball game. Kill, you was
Yeah,
like
bro.
we was talking about that what play did we put in?
I
Was
think
it
it
the
was it MU?
AEIS? No, it was the one right before that, the Sienna.
Yep, yep, that's
And I
right.
was
Yeah.
like, hey, it's $40. And Kill was like, bet. So how do I see it at 40? Like, I'm about to put that in. He said, oh
Man.
shit.
I said,
He-
hold on, look, I don't $40. I'm like, all right. So when I saw it in the chat, I said, okay, I'm at least about to grab 3, 4 of these boys. Man, I went to that option chain, bro. I saw that one said 40,000. Wow, I said,
Now, 4X, 4X.
I don't know about that one.
But that's
But
the power of when you make these trades and you win it, you gather
yeah,
your cash. Because
yep,
once you gather your cash, now you're able to put your money in on a banger for a long period of time, bro. You make
right.
more money the longer that you in the play. You know, like a lot of people they make money short term, but imagine if we bought MU when it was $300 at the beginning of the year. Imagine if we bought
Man,
this when it
man,
was at
man.
$200. It said $2,300, bro, in 6 months. Imagine if we was like, fuck it. Instead of us day trading it, we just gonna buy it for a year. 200 to 2,000, bro. Bro,
Man.
we're all in the ecosystem, be multimillionaires.
Easily. Easily, bro. And that's why I'm realizing too when it comes to the long term, because like I said, like when I was first introduced to it, I was first introduced to the day trade. So, you know, they looking at it like, okay, if you can get in somewhere and get, 5 to 10% gain, um, maybe even lower that, maybe even lower than 5%, like just a little small, like a small slither of a percentage. You know what I'm saying? You got profit for the day, but like you said, like to already be in some a year before and allowing it to appreciate to 100, 200, 300%. Like that to me make the most sense, bro. Like you said, because you got time on your side, like the stock market is already like programmed to go up. Like everybody in business to make money. Like that's what they trying to do. Like they trying to grow their company. They trying to grow their business. So it's I mean, yeah, we know what come with it. We know, those downs gonna come, those down periods. That's gonna be there. But like you said, like really getting into like companies that you truly believe in, that you see, you know, later on down the line, like, hey, I can see this company really going somewhere.
Yeah,
And I want to be in whatever it is that they got planned for it.
yeah,
So yeah,
absolutely. I'm
bro.
with you. I'm with you,
I'm
man.
seeing it. I'm
Yeah.
definitely seeing it for sure.
And that's what I'm saying. Like, if you're gonna day trade, everybody like that's on here, day trade, keep doing it. But the question is, in the trading community, in the investing community right now, is day trading still worth it? Right? Day trading. I know we see a lot of people on social media. Oh, I just did this in a day, or I'm doing this. That's Instagram, family. You know what I'm saying? That's Twitter, bro. Do we really want to make money in this shit? Or do we want to show motherfuckers that we making money in this shit? Those are two different goals. Those are two different objectives. Like, do we really want to make money? Or do we just want to show people that we making money? Oh, I'm trading, I'm investing, I'm him. That really don't get us nowhere. Listen to me. I done did all of that, bro. I remember when I first started trading, bro. I'm like, man, I remember when I crossed $100,000, bro, for the first time at my portfolio. And I'm just like, bro, like I'm him. Like I was still at the job. I couldn't really pump my chest like that, but behind closed doors, I'm that nigga. Like that's literally what I'm saying. Like I'm at this company. I got 100,000 in a month and a half, and then shit, 2, 3 months later, I got over 250,000. I'm that nigga. Like no one can tell me anything in this game. But one thing about this game and one thing about life is that the higher you go up, the harder you gonna fall. Remember that with anything. Like you gonna get humble. I'm thinking, man, I can't miss. Like shit. I'm like, shit, I'm about to put a little 30 piece on this little day trade real quick and see what this do because I can't miss. Like I'm hot. If you hoop, you play sports, you know it's heat checks. But shit, I had a heat check that I was like, hey big fella. It's time to you kind of relax a little bit. When you lose 30 G's in a day, that shit humbles you. You know what I'm saying? And that's what I'm saying. The day trading aspect, like it's cool, right? You can definitely get your profit in, especially if you 10%, 20%, 30%. Like I just need a little bit out of this. I ain't trying to see 200%, 300%. Cool. Go do your thing. But my perspective now, or how I see the market is day trading and trading shouldn't be the only thing that you're doing in your life. Day trading and trading shouldn't be the only thing that you're doing in your life, right? You should have multiple streams of income. You should have multiple focuses. There should be multiple things that you're working towards. And to do that, you can't be on the charts all day. You can't be on the charts all day. Right? You should be working. You should be grinding. You should be trying to build a business. You should be traveling. You should be networking. You should be at different events. If you got cheese and you got so much time to day trade, you need to make sure you get in these rooms. You need to be traveling. You need to be looking up networking events, seminars. Right? One of my favorite things to do is when I'm in a new city or something. Oh my God, one of my favorite things to do is to go to Eventbrite. I'm about to put y'all on a hack. I go to eventbrite.com. Eventbrite.com, I will type in the location of the city I'm in, and I will click on what events are happening this weekend in San Antonio, Texas, in Miami, Florida. What events are happening in Tacoma, Washington? What events are happening this weekend in Los Angeles, California? You're going to have free events, then you're going to have paid events. while you're traveling, this is how I be networking. I'm really giving y'all a hack right now. While you traveling, when you looking up these events, yeah, you don't know nobody, right? You don't know anybody. But when you go to these events and you get in these rooms, you start learning different stuff. You start networking with different people, and you start just growing as a person. That's what I'm saying. If you got time to just sit in front of your screen from 9 to 5 and day trade, bro, you're not having as much motion as you think you are. It's cool to do that. I see Aristotle. I see a lot of people on Instagram that's just sitting in front of their chart. They just day trade. But then I also see a lot of people that's like, no, I'm in leaps now. There's a reason why people are moving to leaps. And that's why I'm telling you right now, bro. If you don't have your strategy down pat before they make trading 24/7, you are gonna get murdered over these next couple years. You're gonna lose all your money, bro. That's why you need to have your strategy now. That is why my strategy is buy on a deep ass discount, buy a quality asset, something that's very important to the ecosystem of where we're going. And number three, buying time on your plays. It's hard for me to worry about a play that's red today when it don't expire until 2027. Netflix down red. Why are you not complaining? Because we got it till this, bro. I'm giving them time to figure they shit out. I just know it's a quality asset on the discount. It was at 140, and we're gonna pull these charts up here in a second. It was at 140, and it's down to $70. 50% off. You go lower, I'm buying more. Why am I buying lower? Because something called asymmetric risk. My risk to reward ratio is greater on the 60 to 70 side to getting back to 140 rather than me buying at $100 a share and then getting to 140.
What was the third thing you said you looked at? You said buy on a deep discount, high value company, and what was the third thing?
Buy time on your
Buy.
play. Buy time on your plays. Buy time. And I know we talk about trading, but yo, make sure we don't forget the bread and butter of this investing stuff is actually buying and holding shares, bro. Buying and holding shares. That's the bread and butter of what we doing. Buy and hold shares. Then the trading is like the cherry on top. All right. So I'm gonna say it again. Buy, buy on a deep discount, buy quality assets, and buy time on your plays. And then every single week, every 2 weeks, every time you get paid, you need to be dumping money into your brokerage account. I got guys that done called me over the past year. Nate, I put the $200 in and I put it in on that Nvidia, or I put it in on that POTR, or whatever it was. I put it in. Now what? Oh, I'm like, bro, you got to keep moving money in so you can keep growing the account. Oh, nah, bro. I thought I was just gonna put the 200 in and I was gonna win it. Wait, what? What did you think this was? Oh, you thought this was FanDuel. Oh, okay. This is not FanDuel, bro. This is not FanDuel, bro. This is something that we're gonna be able to pass down to our kids. We do this shit the right way, we're gonna be able to pass it down. FanDuel is sometimes how people be looking at options. This is not FanDuel. Yes, you can hit on a couple plays, but I'm talking about long-term wealth. We gotta stay invested. We gotta invest. We gotta own companies. When you hit on a parlay, you hit on a FanDuel. I promise you that company ain't I promise you FanDuel not paying you dividends. You hit on a bet, they're not paying you dividends. You don't own the company. You need to own a piece of the company, right? I promise you, the capital appreciation ain't there. It's not there. Over time, 20 years, 30 years, 40 years, pass it down to our kids. Open up custodial accounts for our kids, right? Roth IRAs, traditional IRAs. That's what we're working with. So yeah, we got to make sure we stay disciplined with doing that. Like I say, every time you get some money, I'm trying to put it in my brokerage account. I'm trying to put it in my brokerage account. I want you to see when people ask me like, where your money at? That's I'm gonna help y'all out. When people ask you for some cheese or ask you for a loan or send me some, I'm not lying, bro. All my money invested, bro. All my money invested, gang. Man, if I had it, I would have you, bro. All my money invested, bro. Hey, I'm not lying. I'm dead ass. As you start coming up, as you start being that person for your family, your mom, your pops, your friends, they gonna start seeing like, man, look at the way you carrying yourself. Like, I know you probably got your shit together. Like, hey, you feel like, you know what I'm saying? I just need a quick little 20, $30, $40. Hey, you got me, bro? Like, can you spot me? Sometimes it's cool, but over time, bro, that stuff adds up, bro. That's why you gotta, hey, my money invested, bro. Everything I get my checking account, majority of it, 90% is going into my brokerage account. I would rather have my money working for me than sitting still. So every time we get paid, every time you shoot, do a gig, every time you get something off with your business, every time you get extra cash, that cash gotta go into something that can make you more money. Not to get clothes and shit yet, not to get bags, not to get fancy shit, cars, none of that shit yet. Until you come up and you get there, everything gotta be invested, bro. Everything gotta be invested. So let me get over to these charts real quick. How we doing though, family? We good?
Sir, we good.
Alante, talk to us. What you seeing in the market right now, man?
Man, just not too much really right now, man. Not too much strength. I don't know. It's kind of mixed right now. You feel what I'm saying? I'm not seeing no clear signal to the upside or the downside. It's like, we mixed emotions right now. So we're gonna see how it turn out, man.
And why you not putting in a play yet? What you waiting on?
The perfect shot. Perfect shot.
You might not get the perfect shot, bro.
Yeah, I ain't gonna get the perfect shot, man. I put in the hood, bought it out for a month today.
Oh, you
So
got in the hood play?
we're gonna see what that do, man.
Okay. That's what's up. That's what's up. So yeah, man. Let's look at this SPX real quick. So with this SPX, what we seeing? What we seeing, man? So a week ago, we had this head and shoulders up here, right? Had this head and shoulders up here, and man, I said, man, look like we can fall. Head, shoulder, shoulder again, and we've been falling for the last 6, 7 days, right? But mind you, what's today? Today is June 25th. How many more days of June do we have left? We all know that June is a very rough month for the market, especially during election year, right? Especially during election year. July 1st is next Wednesday, right? So we got tomorrow trading, Monday trading, and Tuesday trading. 3 trading days left until we enter into July, which is a pretty bullish month for the market. All right. So I talked about this last week. I put it on the Instagram. I said I do not want us at all-time highs up here while we're heading into July. Why? Because if we're already hot and cooking in June and the market needs a breather at the beginning of July, and everybody is just now getting in place, getting ready for July to be a crazy month, that's going to catch all of us off guard, right? So around this area, in this lower area, instead of up here by 7,600, I'd rather get in around 7,300 or lower. This is SPX, close to pretty equivalent to SPY, right? But when I'm looking at plays, I always like to look at in tandem where SPX is. Why? Because if I can see SPX is down here, let me show you this. Let me see Sienna, for instance. We got Sienna. We in the Sienna play. So if I see SPX is on the lower end, not on the higher end of its highs, and right, everybody, I want us to make sure we understand marking off highs and marking off lows of recent trading, right? And once you understand this, you'll really be able to see where the ceilings are, and you'll be able to see where the bases are, where the floors are, right? And what do I mean by that? Just a quick breakdown. Ceiling, like the top, it's like if I'm trying to push through a ceiling right here, and I'm trying to get through and I can't get through, that means that might be a ceiling. It's probably too much to get through. That's probably a top, and then look what happens, we fall. And then look what happens, we fall. Right? From there, we come down and touch here. We try to keep going lower. We try to push lower again. We pop back up. That could be a floor. That could be a floor. If you can listen, y'all, if you're not great at investing, if you're not great at trading, if you can get the basics of knowing where the floors are and where the ceilings are, the support and the resistance, if you can get the basics of that down, that's going to make you that much of a better investor than the next person. If you can get the basics down, and that's a top and that's a bottom, that's a resistance and that's a support. That's a ceiling and that's a floor. If you can get that down, that'll give you good indication on where the basis and where the money is sitting at. Right? When it comes to liquidity and trying to find liquidity on the chart, you don't need to know that yet. Probably don't need to know that yet. That's probably a little too advanced, right? But if you can find that support and you can find resistance, that's gonna make you that much of a better investor. Good thing as well, I learned early, when you see us at a high and when you see us at a low, most of the time, you don't want to buy in the middle of this, right? You don't want to buy in the middle of this because Alante just said it. Why? Because in the middle of this is called indecision. We don't know where the market is going, right? But if I can buy down here at this base, good area to buy, that could potentially give me good return to the upside. Or if I'm at this top and I sell or I buy puts up here, that could give me a potentially a good return on my investment all the way down. But when I'm in the middle in here, the market literally does not know what it wants to do yet. So if it doesn't know if the market doesn't know what it wants to do, why are you trying to force a play when the play's not really there? It's like if you hoop before, if you play ball or you play sports, yo, it'd be sometimes when you come down, you got a clean shot, but it'd be sometimes when the defense is just really good and you really don't got nothing, you got to keep passing it out. The worst thing that you can do when you got the defense is all on you is take a bad shot because now you're giving the defense momentum, and in this situation, you giving the people in the market advantage to taking your money. So if you don't have a play, it's so cool to sit on the sideline. It's okay to sit on the sidelines. It's okay. I promise you. The opportunity is going to be there. Right. And once you start thinking like that, once you start slowing the game down, man, this is no man's land for me. From Tuesday to today, Tuesday, Wednesday, Thursday, this is the action that we've had. So if anyone has told you the market been going crazy or the market been bleeding, you a lie. The market ain't even moved, bro. We closed here at 73.63. Wednesday, we closed at 73.57. 6 points. Today, we closed at 73.57. 3 days in a row, the market hasn't moved. Right? But I want to show you an advantage of what you can do when the market is stagnant if you don't want to sit on your hands. If you don't want to sit on your hands. So, show the split screen with Sienna. Look at Sienna. So, I know if Akil's on here, this is what I was talking about earlier. This is what I was talking about earlier with Sienna. When a company like Sienna right here reports earnings, right? They reported earnings. They beat, they raised expectations for next quarter, and they had a high of 630, what, 638, and they fell all the way down to about 420 to this 100-day MA. So a couple days ago, last week, I've been watching it. Great earnings, right? Great guidance, great company, valuable, right? That's the checker. Quality company, cool, check mark. It's at its highs up here. It's at a discount now down here. Let me see the measuring, how high it is, the measurement down. 30% down off of its highs after a great earnings beat. So great company, Sienna Corporation, cool, check mark. Am I buying at all-time highs or am I buying at a discount? Cool, check mark. And did I buy time on it? Yo, we bought this a couple days ago, last week. We're in the 440 range, in this range, somewhere in here. Today it's at 484 and it's trying to break the 500. 440 range. It's at 484 and we bought it all the way to October, towards the end of the year. So check mark again, we got time on it. So if it reaches those three check marks, yo, I'm good with it. I'm good with it, right? Sienna can fall apart for sure. It definitely can. But one thing, like I said, one trick that I always like to look at is if I can see SPX stagnant, hmm, but I see a company well off of its highs and it's trying to make its way back to the upside, hmm, this might be a good company that might be flying under the radar that might be ready to go. Why do I say that? Because if there's money starting to reallocate inside of Sienna while the market is stagnant, what happens when the market starts going back up? Hmm. So we got Sienna all the way to October. Um, and we're already up, I think, what, 1,100, 1,200 on one play. Just put it in a couple days ago, right? So we gonna see what that does. I remember his high of his option contract was around $150 when it was up here. When it was up here, the contract was worth 150, 100 and close to $160. We bought it for $40. So if this gets to $80, we'll see 100% return. If it gets to $120, we'll see 200% return. If it gets to 160, back to its all-time highs in the next couple months, sometime in between these next couple months, we're looking at a 300% return. $40 to about, well, yeah, $40 to about 160. I mean, we're looking at, 4 grand to about 16 grand in just in one play, right? If you bought a couple of them, I know Keys bought a few of them, right? But if you just bought one, if you bought two, man, you're still looking at a $4,000 investment to about a $16,000 return. Okay, so that's how I'm seeing that. Another company I'm looking at, I want to look at, and I want y'all to make sure that you are making sure these companies are in tandem next to each other when you're making these trades. So with Alante buying Bitcoin, I mean buying Hood, what he would use in tandem will be Robinhood, right? So he bought Robinhood today, right? He bought Robinhood today, and I talked about this a while ago, right? When Bitcoin turns around, I'm looking for Robinhood to turn around, right? But at the moment, look how Bitcoin performed over the past couple of days. Look how Robinhood performed over the past couple of days. Where is Bitcoin going? Who knows, bro? You gotta ask J. Cole. J. Cole, where's Bitcoin going, bro?
I'm gonna say 40,000, bro.
40,000?
Yup.
Woo! Jesus. 40,000.
I'm gonna say 40,000 around October.
What's crazy is you caught it in January. He's like, hey y'all, just I'm not no genius or nothing like that, but I'm just saying from an aspect of like how these Bitcoin cycles are. The cycle not done.
bro,
And
because it's been this last run, this last cycle has been like a lot of noise because it's never been this much institutional money in the Bitcoin and crypto. So everybody's like, nah, the cycle's over. It's different. It's too much institutional money. And it's like once we topped in October, I was like, oh shit, it's happening again. But I was still like, you and me was talking about it because what was it, Tom? What's his name? Tommy Lee?
Tom Lee, yep.
Yeah, he was talking about 250 by February, and it was a lot of noise. And I was
Yeah,
like,
yeah, his
so I
dumb ass.
was I wasn't convinced that the cycle was for sure, but like, yeah, right around January, I'm like, man, we starting to slip. I'm like, we topped in October, just like we were supposed to.
Just like we were supposed to. And then if you look at the weekly chart, like I say, always zoom out. You look at the weekly chart. Is this, I mean, I'm gonna ask y'all, is this bullish or bearish? Is this bullish or bearish, bro? Is this heading upward or is this heading downward? You know what I'm saying? We crossed 57,000 yesterday for the first time since September of 2024. It's been almost 2 years since we've been this low. I seen Mark Cuban talk about it um the other day, and he was saying, "Hey man, I sold all my Bitcoin." What? Mark Cuban? Why? First off, if you're wealthy, you always know. This is a secret upon the wealthy. You never sell anything. Never sell. I don't give a fuck if you bought your shares and it's up 1,000,000%. Never sell. Why? Because you can always take out loans against whatever you own. And the more assets that you own and that you have, the more loans that a bank or a brokerage firm will give you. That's why capital appreciation and asset allocation is very important, right? We want to get as many assets as possible because the more assets you have, you can go to your bank, you can go to your brokerage, you can go to individuals, retail, certain big dogs, institutions. Hey, this is how much I own. How much of a loan will you give me for that? Right? Why would they turn you down if you own so? They make money off of you getting a loan. You got to pay interest on it. So why would they turn you down? So the secret is never sell anything. This dude said the other day, um, he sold his Bitcoin. Let me see if I can look up this. Mark Cuban, Bitcoin. So this is 3 years ago. Mark Cuban predicts how crypto will evolve to meet our needs. Look at all this. Mark Cuban says people are looking at Bitcoin in the wrong way. This is 4 years ago, 3 years ago, right? Look at this.
Billionaire Mark Cuban apparently has sold almost all of his Bitcoin. And the reason is really scary if you're holding a lot of crypto or especially Bitcoin.
This might get some people upset. I think Bitcoin has lost the plot. Bitcoin was always the best alternative to fiat currency losing its value. And every time the dollar dropped, Bitcoin should have gone up, and it just didn't do it.
Mark Cuban is actually on point here because Bitcoin is designed for global instability, currency debasement, and it's supposed to be a safe haven in crazy times, like during the Iran war, where during the conflict, gold exploded up, nearly doubled on the biggest asset in the world, and Bitcoin actually went down significantly. So I'm not surprised that Cubes has sold his Bitcoin. In fact, I don't hold nearly as much Bitcoin as I used to because of exactly this. The strength is not there, and the narrative is on life support. Now, while I still believe in the future of Bitcoin, it's true that there's just a lot of other places to be keeping your money right now. First and foremost, AI and robotics, which I've made 7 figures trading this year alone.
Yeah, man. So could y'all hear that?
Yeah.
Yeah.
So with that alone, it's like you've been an advocate for Bitcoin, and then you just say last week, 2 weeks ago, Bitcoin's lost the plot. And it's pretty ironic. You say this a couple weeks ago was May when Bitcoin is around 80,000. Now we're in the 58,000. It's like, what did you know before you sold? So J. Cole said 40,000. Mark Cuban, he sold all his Bitcoin. And mind you, he could just be saying, I sold everything in my personal account and still have a whole nother account, right? But what we just need to pay attention to is that, man, these asset classes are changing every day, right? Bitcoin is actually going through one of its cycles. Um, but I feel like we still need to stay investing. I feel like if you believe in it, if you believe in an asset and you understand the asset, buy more. Like, don't, you know what I mean? Don't get out of it. Don't get scared. Buy more of it. Buy more of it. But this is also showing me, Mason, that as when gold, I thought gold was a hedge to stocks. So when stocks go down, why is gold getting crushed? I want to show this too. He asked me that. Bro, gold isn't the only thing that's getting crushed though. I just showed you Bitcoin getting crushed, right? Look at gold, bro. This is the weekly chart. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. About 17 weeks in a row, gold has been falling. Gold is in this area though, a good support area though. Gold is in a good support area though. But the question is, why is gold falling when the the dollar's value is not there anymore? Because how you look at it over time is, if the dollar isn't strong anymore, you got to put your money in alternative assets. Alternative asset would be gold. Alternative asset would be silver. Alternative asset would be Bitcoin, right? But the alternatives are falling and the dollar is not getting any stronger. So it makes you think, what's really going on, bro? What's really going on? And if you know, over time, gold has been used as a hedge. Why has it been used as a hedge? It's because gold has probably been one of the only assets other than silver and copper and all the other metals that stands the test of time. Gold was around way longer than we were here. Gold was around way longer than we were here, and it's still around. Thousands and thousands and thousands and thousands of years, bro. Gold is still here. So it's always been used that that's gonna be something valuable over time. And we gotta own gold. Gold's been falling though. Bitcoin's been falling. So what this tells me is that we're either in a risk on environment or we're in a risk off environment. We're either in risk on or risk off. There isn't any more, are we gonna hedge and do this? Or we gonna hedge it? No, it's either people are putting their money in shit or they're not putting their money in shit. Hmm. Pretty ironic. June's been a rough month, right? We're well off of our highs. Look what gold has been doing this month. Let me do the side by side for us. SPX. Make sure this is the weekly chart. Hmm. Interesting. Interesting. And these are little things that you have to kind of keep researching and keep finding, y'all. Like, if you want to be great at anything, bro, you gotta put the work in. You know what I'm saying? You gotta put the work in. And just keep researching, keep trying to find stuff that makes sense, right? Why things are doing this, what people are not talking about, right? 4 weeks in a row. 1, 2, 3, 4. Gold has been falling. 4 weeks in a row. June 1st. 1, 2, 3, 4. The index has been falling. So what this tells me is, July said we have a strong month. We go back to the upside. I'm pretty sure as we go back up, we're gonna start seeing gold go back up as well. But Nate, that doesn't make any sense. I thought it's supposed to be a hedge. That's what I'm saying. I think the rules are changing, bro. I think the rules are changing. Same with Bitcoin. Same with Bitcoin. Let me see if I can go here. Yeah. Let me see. 333. Move this thing out the way. Oops. Let me see. And just let me do 4 the other day. Go back to Bitcoin. This is the weekly chart. 4 weeks in a row. Look at what Bitcoin's been doing. So, So what does that mean? That means money's been moving out of Bitcoin. Money's been moving out of SPX. Money's been moving out of gold. So it makes you think, what's really going on? So me personally, what I think we just getting our regular cool down in June, bro. We're getting our regular cool down in June. Well needed cool down too. Look at this. I said this at the beginning of this month of June. I'm like, bro, this green, this green, this green, 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 green. Dog, this it's not healthy for us to just stay this green. We gotta get a cool down. All these weeks in a row we've been green. June is usually a red month. Nate, why we sitting on our hands? Why we ain't put a play in yet, bro? Other than Micron and SanDisk in the memory sector, why we ain't really put in no real plays? Bro, when you see this and you zoom out and you see this, that's probably why a lot of these stocks are not doing as well as the memory sector, right? That's probably why. So if we can see this now, we can see moving forward what's going to happen, right? So as July creeps up, I expect us to probably get another sell off or day or two. And then I expect us to fly into July, going back higher. I expect Trump to start saying again when July, we good in war. We, no beef with nobody. And um, market is at all-time highs. I told y'all so, and I'm the best president ever. And I did that, and I'm him. Y'all owe me, and I told you I was gonna help you out. If you've been in the market, you knew June was gonna be a red month. And if you want to be real, 70, 7,600, 7,300, it's really not even that bad. You really not down that bad. But I will say, if you've been day trading, right? You're trying to figure out why the trade's not moving that crazy. This is why. Come look at this. When you come see this, this should let you know everything. Damn. So from 7,600 down to 70, lowest we went to 7,200. That's only a 300-400 point move. That's why the plays ain't been hitting. Your day trades ain't been hitting because we haven't really had any much movement for real. And if you ain't on your chart executing a buy and executing a sell right when you seeing and you locked in and you looking at your screen, bro, you're not hooping this month. And if they are, they capping. Unless you're rare, you just getting in and getting out of your specific plays. But when it come to hitting 300 percenters, 400 percenters every day, you're capping. You're not doing it. I'm looking at the market. The market is not just flying up and the market is not just flying down. So if you can't say, oh, I'm just in puts and I've been cooking, bro, I'm looking at the market. No, you haven't. I'm up 1,000, 2,000, 3,000% on puts. My nigga, we haven't even went down that low. Oh, well, I'm up a 2,000, 3,000% on the calls. My nigga, we've been going down. Unless you in memory. If you're not in memory, you lying, bro. You lying. So This is how I see and get a gauge of the sentiment of the market, right? I can see what's really going on in the market. If the market is pushing upward, or if we staying still, or if the market is pushing down, right? Right. So this is something I'm looking at, and look at the NASDAQ. Another thing that I'm looking, this is active, this is live right now. NASDAQ is bleeding as we speak. NASDAQ is bleeding as we speak. What else is bleeding? Bitcoin. Remember, the NASDAQ 100 is the index that has all the technology companies in it. If it's technology, if it's technology and it's a big dog, it's in this index. Right? I know we teaching a lot tonight, but I just want to make sure we understanding what's going on and what's about to happen. You gotta know what's about to happen. If we see this, we can kind of get a good feel of what's about to happen. I always relate everything back to sports. If you play ball, it's good to see and watch film on what you've done wrong, what you can do better, what you've done right, and what could happen if certain scenarios play out. That's how you become a really good player on the court. That's how you become a really good investor. Putting time in to see what's really going on. Putting time in. If I can see, boom, I can see this. Man, we only got a couple days left with June, and we know June's a rough month. Cool. What I would be worried about. This is what I would be worried about if we weren't here where we are. If we were down here and we were breaking below down here heading into July. If we were down this low, that means risk is starting to really turn off and people are not really invested in that bullish as we thought. And once we break down here, this other low, we can be headed back down to the downside. That's what if I was worried, that's how I would be feeling. But if we in June, even in this area down here, let me see. If we in June, 28,400, right? That's still that's a steep drop from 29,200 to 24,000. That's a steep drop. Even if we drop down there, I wouldn't be worried. Me personally, I think Trump is about to turn the markets back on. I think he's kind of turned them off in a way, figuratively. I think he's kind of turned them off, saying Iran war, this and that. Yeah, I don't think it's ironic that, look at this, show the weekly. Yeah, I don't think it's ironic that when March hit and we was down here, 1, 2, 3, 4, 5, 6, 6, 7, 8, 9, 9 weeks in a row, we was getting along with every country that we had beef with. And then June starts. Look at this, y'all. I'm not bullshitting. Look at this. I'm not bullshitting. Look at this. I'm hovering over this candle. What does that say at the bottom down there? Look at that. Monday, June 1st. The first day of June. We're back beefing and we're back in war. So all these weeks in a row, we've been on the same page. We're getting along, kumbaya, buddy, buddy. We're going to make sure Iran is cool. They said the deal is done. We're good. At 12 a.m., June 1st, randomly, we're back beefing. Markets is selling off. Markets is rough. Markets is struggling this month. Interesting. Interesting, right? Very interesting. So July is usually a bullish month, and I look like we can head back to the upside. So definitely look at that. What I'm seeing on that Sanders. Definitely want to cover Sanders. This shit just don't make no sense, bro. This shit don't make no sense, fam. This is what I'm talking about when it comes to day trading and when it comes to investing, bro. April 2025. It was $28 a share, bro. Niggas is talking about day trading. Niggas is talking about weekly contracts. I'm gonna buy something for a couple weeks. I'm gonna be up 200%, 300%. $28 a share. And it was down here for 4 weeks, 5 weeks. $28 a share, $30 a share. April last year. 1 year later, $30 is at $2,331 a share, bro. When you talk about life changing, when you talk about generational wealth, when you talk about changing your life, this will change your life less than a year, bro. 1 year. Bought one contract. That one contract worth $400, $20, $30 a share, not to $400 a share. That would have been caught. That would have been solid. $40 to 400. You got like a $50 strike. You'd have been up. You'd have turned like $400 into like 400,000. For 40,000. I'll say, let's say 100,000. So $400 a share. $800 a share from 30, $40. You'd have been close to up to a million. 2,331 a share. Bro, you're sitting on something large, bro. Pause. That was
Ah,
crazy.
crazy work. I'm glad you caught yourself,
That
boy.
was crazy.
Now
That's insane. Like,
Chill,
I,
chill, chill.
I ain't gonna lie, bro. Bro, Troy just cooked, bro, in
He
this
cooked.
class. Bro,
What's he
it's
talking about,
some
brother?
stuff, bro. Turn that down. Here, baby. Rom, that just dropped the two-time leverage, bro. He just showed us a two-time leverage strategy, bro. That is crazy. But it's only on specific stocks, like only on specific sectors and specific stock. Bro, this nigga pulled 9,000% off of when I tell you, bro, nine thousand
That's
percent,
insane.
nine, bro, not 1,000, nine, bro, 9,000%. So a $3,500 investment, bro. Just imagine 9,000. I tried to do the math. I just was like, fuck it, I ain't even gonna do the math, bro. The two-time leverage he did SOXL when it was at
So Excel.
28.
Mhm.
Bro, when it was at $28. I remember him putting it in the what's the name, but I didn't know enough about it, so I didn't take it. Um, so bro, he showed us the return on that one, and then he just showed us the drum two times leverage ETF, and it's called ROM or RAM.
Mhm.
And he was basically talking about using the specific strategy. Like, all right, if you know that this company, when you specifically see a tremendous pull down, like we had saw in memory or in the chip sector earlier, what in March, he pulled a trigger in March on the SOXL, I believe. He did that in March, and he was like, bro, that was when the semiconductor was getting held down. And he was basically like, using the same type of strategy to make sure that you're going out long term, but you
Mhm.
have to understand the story about it. He got an
Mhm.
arm one, it's an arm one, and it's a ROM one, and it's a SOXL. So those
Mhm.
are three that he was like, bro, really look at that are really good, right? But you got to make sure the stock has dropped at least a good 20% itself on the ETF before you make that call. But
And I'm looking at this right now, like the ROM 2 times leverage of DRAM. Yo, this is starting to get ridiculous,
this
bro.
is getting ridiculous,
This is
bro.
so they, bro. So instead of buying the stocks, they usually will make an index or ETF. So you don't got to actually buy the stocks. It's basically you buying all of them in one, getting you better exposure, getting you better leverage. So instead of buying MU and Sanders, they make Drum. Then of Drum, now they made ROM. That's 2x of Drum. Like this is actually getting ridiculous. Like this is
So
insane.
earlier inside of when you were inside of Schwab, what were they saying about the two-time leverage ETF?
So the two times leverage ETF, it actually wasn't as
Big thing, big of a thing,
oh, man, because it's very risky, right? And a lot of people just
volatile.
very risky, and a lot of people are like, instead of just buying the two times leverage ETF, why won't you just own the asset? And then you start seeing this hyper growth and this hyper concentration into tech companies like the way we're doing. Then you started seeing companies like NVDL, right? This is the two times leverage of Nvidia. Then you started seeing companies like MTU. This is two times leverage of Meta. So then you start seeing all these companies start taking off with these two times ETFs, and then you started putting them on the radar. So I think I put it in the
Yeah,
ecosystem.
yeah. I thought, bro. I've been
Yeah,
grabbing. I scoop shares of that.
been
The
seeing
I ain't
that, and
gonna
then
lie.
AMZZ,
Google, yeah, Amazon. I got
AMZM
all
two
them.
times leverage. I think is what is it? Goo
GG, GGLL, I believe.
GGLL. Yep, two times leverage of Google. So another good thing about this is like if you don't have the capital to be buying $100,000 position sizes, this is the two times leverage ETFs, and this is what it does. Right. And it gives you that exposure kind of for like smaller investors to kind of participate into the appreciation of these stocks. But the bad thing about it is like, that's why I'm saying this is getting dangerous, is because what Roundhill is seeing, what Vanguard is seeing, what BlackRock is seeing is that when you can't get everyone to buy Micron at $1,200 a share, if you can't get everyone to buy it at $1,200 a share, what we're gonna do is we're gonna make leverage ETFs. So we got different asset classes being able to still participate in the growth of the company. So what that means is you got people that are bringing in $300,000 a year. You'll be considered a accredited investor. You can participate, but we don't want to shut the door to everybody. We want to make sure that everybody can participate. So what they're gonna do is we'll make something cheaper, but that tracks it. So the people that's only making about 100,000 a year, they can give us their money too. Then what you're gonna start seeing is, okay, we don't want to close the door to people lower than that. So we got the people that's making over 300,000 a year invested. We got the people that's making over 100,000 a year invested. What about the people that's making less than 50 G's? Now we got something called, like he just talked about, ROM, right? ROM, let me see. Pops up for me. ROM stock that's about like $10 a share. Damn, if I can spell, god damn.
Yeah, yeah. Have any thoughts on HBM?
HBM.
Yeah.
What is this?
It's in the memory sector of AI.
Okay. HUD Bay Minerals.
Yes, sir.
Let me see. I've never looked into them, brother. I've never looked into them. Year to date, they upset what 17 per what 3% year to date. Yeah, but they was up 17% today. 3% today. I mean, yeah, 3% year to date. Me personally, just eyeballing the work, right? And you'll get that if you know what I'm saying, you know what I mean. But if you just eyeballing the work just off of just eyeballing it right now, in the memory sector, and there's companies up 2,000%, 1,000%, 3,000%, 500%, 800%, and they're in the same sector and they're only up 3%, just eyeballing it, just off the eyeball. I ain't did no fundamentals. I ain't looked into it. That's not a good sign for me, right? They could go, right? They could go, they could blow, but just eyeballing it, just off the, just looking at the company itself. Why are you only up 3% in a sector that's getting the most love this year? right? And so, I mean, we can definitely look into them. Hud Bay Minerals, what do they do? Scroll all the way down. Let me check to see if they got their stats up here. Let me check. Hubei Diversified Mining Company focused on the exploration, development, operation, optimization of properties in North and South America. It primarily explores for copper concentrates containing copper, gold, zinc, I'm not even gonna try to say that shit. Concentrates in silver. It owns 100% interest in Copper Mountain. So okay, so not directly the memory space, but a component of a small part of the memory space, right? So that's okay. That makes sense. So they're not technically a memory company. They're not in the memory space, but they have a component inside of them that benefits memory. But then if you look at HBM. Another thing I like to do that y'all should do is like HB stock and then look up competitors. If you see their competitors, you'll start seeing companies like this, larger industry. So Freeport, FCX, we talked about them earlier last year. FM, we talked about them, right? So if these are companies that are larger than them, I'll always want to know who the competitors are in the space, right? And then if we look up Freeport, FCX, because we got them FCX. We got them on the watch list, right? Year to date, they up almost 11%, right? $62. So even with them only up 10 to 10.8%, almost 11%, that's still crazy for me because there are companies that I just showed you in less than a year or 1 year, they're up fucking 6,000% in the same space. So one thing for me, I love going with what's working. Right? I do love going for undervalued companies, right? Sometimes, but I love to go with what's working. And what's working right now is memory, optics, um, storage, energy, um, right? Those type of sectors are that's what's cooking, and that's where BlackRock, Vanguard, that's where they're moving their money inside of. That makes sense? That makes sense for us?
Yeah.
Yes, sir, brother.
Got you. But before I get off these charts, y'all want to see any other ones?
Yeah. I wanted to see uh Intel.
Intel.
Yeah,
Intel. We just talked about Intel last week. Intel staying strong, bro.
that's what I'm saying.
You
Hey,
still in them?
I have shares. Like I bought shares of Intel around
Oh,
like
I
the
Nancy,
thought you had got the play
125
last week.
range.
Nancy Pelosi, she jumped in the Intel
Oh
calls.
no, I
Y'all
got
seen
cooked
that?
that play. That shit was too volatile, man.
You said you sold it?
Yeah, yeah, I got cooked. So I
My
bought
boy said
shares.
I was getting fried. That motherfucker. I had to get out of there.
Yeah, so I was
Um,
like, you know what, I'm gonna just get rid of shares, man.
what you had grabbed a weekly joint or something?
Uh yeah, yeah, it was a weekly. And I'm like, I'm seeing it. I'm like, all right, it could be that week, and I just got cooked off the volatility. So I was like, you know what? I'm gonna just grab these shares around that 120 range, and I saw it bounce back up to like the 130. So I know Trump is big on Intel, like we spoke about. Nancy is backed by the government, so I think as far as I just know that that's the sleeper company. You know, like that's gonna I feel like down the line is gonna definitely do numbers.
Definitely. I definitely feel the same. I definitely feel the same. I definitely think Intel is gonna be all right. But to Tev's point, man, it's just knowing the sentiment, know what time we are in the market. You know, I said it last week on the call. I said, "Hey, y'all, June is not over, y'all. We got some more volatility ahead, which was this week, and this motherfucker been volatile, dog. We've been going up and coming right back down. We've been going down and coming right back up. This was one of those weeks where if you ain't make a play, I ain't mad at you, bro. I'm not mad at you at all. Not mad at you at all. So I definitely think this is a month to be in position, but to be in position for some time. Not for no weeklies, not for something out for a couple weeks. not for something, not for a month. Definitely think this is a month that you got to be able to get through. If you do buy,
Yeah.
don't even open your portfolio in June.
Mm.
Open your portfolio back up in July. This is that type of month. So definitely think we run into July, we go crazy, and then we go from there.
I'm starting to also hear a lot about sim too. Like as far as
Symbiotic.
yeah, as far as like a real longevity 5 to 10 year hold
Uh-huh.
in the robotic sector.
Yeah.
I know
Are
Seth.
you wanted to see them?
Yes, sir. If we could.
Let me see. Sure.
Hey Nate, can you look up light
Hey
on this?
man, I told you I'm not doing no more charts for your ass.
Oh shit.
All right, I got one for you when you done with it.
I'm just kidding. You said symbiotic, and what'd you say, Brendan? Which one?
CDNS.
Cadence, huh? Was that cadence?
Yep.
My baby right here.
Symbiotic. So I said Sim, Tev. Remember, we was chopping it up about symbiotic. One thing I always like to look at is these lightnings. They give you a quick snapshot of what's been going on in the company. So if I look at this and we look at the highs of symbiotic and where they was around $87 a share. You look up, bro, 2 months later, 87, and it touched $30. Some broke, my nigga. Something happened.
Uh,
So I like to go look at what's the latest updates. So TradingView, they started doing this. They
hmm?
give you quick snapshots of what's really been happening. And then you go look at this. We click on this, Symbiotic down 16% since last earnings report. Can it rebound? Just a quick synopsis of this. A month has gone by since the last earnings underperforming the S&P 500. So if it's underperforming all these 500 and some companies all rounded up in one and trying to move as a unit and it's underperforming all of that in one, that's not looking too good for me, right? What will the recent negative trend continue leading up to its next earnings release? Is somebody due for a breakout? Well, first, let's take a quick look at the recent earnings. So the earnings, blah, 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 earnings per share, excluding the 43 cents to 44 cents, easily outpaced the estimate of 11 cents. So it looks like they beat 44 cents to 11 cents. In this time a year ago, tech services company posted a loss of 4 cents per share. Interesting. Let me see. Oh, got it. So when you look at this per share, this is 44 cents outpaced the estimate in the year ago, right? We see that, but it looks like in the past quarter posted a loss, 4 cents per share. Let me see more revenue. Revenue 675 million beat the consensus mark of 2% increase 23% year over year. Mind you, remember Wall Street's looking at how you perform last year this time, and they watching how you perform in the last 90 days. Okay. System revenues increased 23% um, year over year, 634 million, driven by the company's proactive initiatives. It started 14 new systems. Let me see. Software year over year, 12.9 million. Guidance for the third quarter, the company expects revenue to be in the range of 700 to 720 million. The company expects capital expenditures to be in the range of 20 to 25 million. So it looks like the spending is going up. The past month, investors have witnessed the upward trend in estimates review. So outlook estimates have been broadly trending upward for the stock, and the magnitude of these revisions looks promising. So what this means for me right now is that the money and where they were, it looks like the stock was too high back then. Right? Because when we're looking at the fundamentals, you're not seeing something completely off. You're not seeing them say, oh, this was a complete miss. It was a terrible company. They didn't produce enough revenue. They didn't produce enough earnings. That's okay. Right. And stocks can fall off of that. And that doesn't mean that they're a bad company. That just means that they were already priced for perfection. That means up here in the 80 range, 86 range, that was just probably speculation. Motherfuckers is just try just dumping in money and really not even understanding the company. And then over time, you start reading the fundamentals, you start seeing what they're actually worth as a company. Then you start seeing those companies start falling down past their 400 day and recalibrating, right? And recalibrating. So, not a bad company, Tev. Especially in the sector that they're in the robotic sector, definitely in the warehouse sector. So they got big partnerships with like Walmart. I think they're trying to get one with Costco. I think they're trying to get one with like a lot of the big retailer warehouses. So warehouses don't actually have to employ people no more, and they can just have a robotic system that's actually moving your boxes and taking them off the shelves. So I definitely think Sim, when it comes to a 10-year hold, I definitely think they're a 10-year hold. Definitely think. But when it comes to trading, I don't know. I wouldn't trade them. But $40 a share for a company in a great sector, it don't look bad, bro. He said light, and then we're gonna look at cadence real quick. You said light, Nigel?
Yeah.
Got you. And then Ted, did that help a little bit?
Yeah, most definitely.
Bad brother. So light, we talked about this. I remember I sent this chart to KB. One thing I always like to look at is like the support system or the support line, right? Or the resistance line. Remember, your support line and your resistance line is like the line of scrimmage in football. That's where all the action happen at. That's a very important line, right? But with trading, it's two lines of line of scrimmage. So you got the top side where the action happening, and then you got the bottom side. I had put this up a couple weeks ago where I'm like, chart came down, light came up, it touched this point right here, and it fell off. Okay, cool. That might be a good area. It came again to this area again, and it was fighting. It came up, it came back down, it came back up. I'm gonna highlight that area again. That means this could be a line that we want to definitely keep our eyes on. We pop out of there, we go up, we come back down, look, line, we touch again. That line of scrimmage, that's where the action really taking place. We pop up, we get tight, we come back down again. Line of scrimmage, we defend that line again. From here, down we really go, we go to all-time highs. We get up there, we struggle, we fall back down. Now I'm looking again. What line did it come to and would it touch again? This line again. So that means this line of scrimmage is probably very important for us to look at. We go back up, we pop again. This line up here. So, okay, now I'm starting to put a story together in my head. When it comes up to this 1,000 range, 1,050 range, it looks like people are taking profit and it sells off. But when it keeps coming down, because I got proof and I got data that I'm looking at, when it comes down in this 800 range, it bounces off of that line and it goes back up. So cool. I'm writing that down. 800 line is the support. 1,050 is the resistance. Okay, cool. Now I'm gonna watch it. In between, mind you, I told you, in between here, we don't want to buy. We don't want to buy puts. We don't want to buy calls. Why? Because it hasn't picked a direction on where it wants to go. When it came up here again, cool. When it came down again, what line did it come and touch again? 800. It wicked down, but it still defended that line. We pop right up. Still in this area. I don't know what's gonna happen. We come back down recently over the last couple of days. What line did we touch 3 times in a row? 800. And we popped up. So perfect timing. You can call this confluence that if it touches this line again or it stays in this area while we go into July on Wednesday, as money starts coming back into the market, that means this could be a good buying area down here for us to expose back to the upside for like. So where it's at right now, if you got in at 800 today when it came down there and it's up to 860, you up 60 ball in one day. It's not bad. But if you can understand these charts and you can see where they are, you're like, damn, that means if it come down here again, I might want to take a shot on it. Why? Because every time it comes down here, it doesn't go past and fall down and it defends this line. That means if it's defending this line, that means that's a line of scrimmage. That means it's like a floor. That means it's supporting this line. And that means that buyers come in very hard around this line. Could okay, cool. So if I see that, that means that could give me a good assessment for a play that I'm trying to make for a couple months on LITE. Cool. That makes sense, Nigel? If
Yeah,
brothers,
appreciate it.
that makes sense. And then he said CDNS, right? CDNS, cadence, man. So I remember Troy talked about cadence a while ago. We've been looking at cadence and synopsis. I want to make sure I put these side by side because they're in the same similar sector and they low key be moving in tandem sometimes with each other. Let me see. Synopsis, where you at? There we go. Let's see. Let's see. What's this, the daily? What's this, the weekly? Check some daily. Cool. All right, bet. Okay, cool. So me zooming out, looking at cadence, looking at synopsis, you know who the company that they're moving in tandem with, right? They move in tandem, but who do they support the most? Who talked about them the most? And that's the company Nvidia, right? And if we know Nvidia is championing them, when we saying we got their back, they got our back, we supporting them. Okay, if you see both of them from their highs, 539 down to 450, and you see Cadence 416 down in the 300, let me see how Nvidia has been performing. I can almost guarantee that if they all support each other in this way that they could claim, I can guarantee that Nvidia has probably been falling off of its highs too. Let's check to see. Mm, look at that. Look at that. Look at that. So what we see here, Nvidia had a high around 236, and we see them down in the 190 range, bro. 190 range, right? And if they all support each other in this economy, this money reallocation to each other economy, this is something that we got to watch for, right? This is something that we got to watch for because the sentiment towards Nvidia is kind of predicated on synopsis and cadence as well. So going back to cadence, I like cadence. Let's see. Where do I like cadence at? And I put this green line here because I remember that's when Troy was talking about it. And I always like to put like, yo, when they mention it, where's the stock at? When they say they got into a play, we put a play in last night. I always like to put a green line just to see how has the stock been performing since someone's talked about it. Y'all can do that as well. If I talk about AEIS, if I talk about COHR, if I talk about what do we just put in? CN. If you hear me talking about it, you can go on your chart and you can make this line here and be like, hey, this is where Nate was talking about it at. In a week, I'm gonna go check and see where the company's at. Right? This is something that everybody can do. So I put the line here where Troy had talked about it initially. Um, and then I'm seeing where they are now. I just feel like they're going through a great breather as well. Right? And they're not going through a drastic fall off from 416 down in the high 300s, 360. That's not that bad, bro. If they was 416 and they was retouching this 400 in May or lower, then I'd be like something not adding up. Something's not right here. Cadence, I like cadence long term. If you like Nvidia long term, you should like Cadence and you should like Synopsys long term as well. Because they all gonna be supporting each other as they grow this AI ecosystem. So I definitely like Cadence long term. I definitely see them. I see them potentially getting to. Let me see if I can get my. Let's see if I can pull that fib out on a. I can see them going to easily. If I stretch this out, the longer we go, I can see them easily. I was gonna say 500 eyeballing the work, and then I put my fib on it. I can easily see them stretching to that 500 range, especially over this next year or two. Right? They was already at a high of 416. They was only what 84 points away. And we've been in a consolidated red sell-offish month. When they rebound, I can definitely see Cadence going back to that upside. Make sure you remember that cadence. Did that answer your question, Brendan?
Yeah, it definitely answered my question. Yeah, and I've been noticing that too, that they've been calling kind of following Nvidia quite a bit. But I feel like Nvidia for some reason is selling off with all these like OpenAI. They just announced a new chip. Like they using their own chips. But knowing the background of that is that OpenAI is gonna have to use Synopsys and they're gonna have to use Cadence too, which I feel like
Definitely.
it'll start to move a little bit independent of that. So yeah, that's exactly what I was looking to get answered.
Definitely. I definitely think Cadence about to go back to the upside. And I definitely think Synopsys, and you bring up a good point. If Nvidia is championing them for their system, why wouldn't other great companies use their system either? So I'm with you, bro. I'm with you. And I also think with Nvidia as well, I mean, let's just keep it real. I mean, bro, we gonna have niggas Intel, we gonna have AMD, we gonna have all these companies announcing new chips, AVGO. Bro, when you the leader, when you the big dog, bro, you gonna have people trying to come for your crown, bro. And the stuff that Nvidia has done and what they're doing and what they're continuing to do. Another reason why I love Nvidia long term is because instead of them saying we competitors, what Nvidia likes to do, they like to put money in your company to own your company. Nvidia announced a partnership with Synopsys Cadence a while ago where they put money into them. They put money into them. Nvidia already talked about how much money they're giving to OpenAI. They already talked about partnerships with AVGO. They already talked about Intel. They already talked about AMD. They already talked about Meta. They like, damn, Nvidia, you investing in all these companies. Lumenton, Lumentum, right? COHR, right? They talked about memory, right? All these companies that Nvidia could be competing with or they could be into it with, they keep owning them. They keep buying them. So in a like indirect effect over time, bro, Nvidia is just gonna just slowly keep creeping to the upside. Why? Because the companies that are taking off, they own pieces of them instead of
Like an
competing.
AI monopoly.
AI monopoly. But they're doing it the right way. Instead of instead of owning full control of the companies and getting all these companies under your umbrella, you just partnering with them. It's a different way to go about that shit. That's why collaboration over competition all day, bro. All day. Collaboration over competition. You make more money in collabing with somebody than you do with competing with somebody. You compete with them, you're gonna have I own them, I own them. Now you're gonna have the government on your ass talking about you got a monopoly. Now you're gonna have the government on your ass talking about you can't own all that. You're controlling the market share, you're controlling the prices, and we don't want you to own all that. Now you into it with the government. So Jason like shit. Instead of me being into it with the government, let me just help all these companies keep growing. Because if they keep growing and we stay at this kind of this similar level, we're not similar, but if we stay at the level that we're at as we're growing, you can't say I own the entire industry. I'm helping the industry actually. So you really need me, and I'm putting my claws into everything under the scene. So he's moving like a genius. This Nasdaq is actually falling off right now, and we about to get off here. I'm about to go get some grub. Look at this Nasdaq that I was just talking about. Nasdaq is down 384 points right now. So if this is down 384 points, I know the S&P 500 is getting blasted. Another one, Bitcoin. Look at Bitcoin. Bitcoin falling back down as well right now as we speak. ES, yep, I just said ES down 30 points. So SPA's down probably $3, $4 right now. SPA's down $3, $4. NASDAQ is falling as we speak. Remember, I said I want to stay at
Great.
least in this. What'd you say, brother?
That great. Awesome.
28,400. That's the line that we need to look for. I want to look for this line anywhere in this range. I want to look for this range for us to stay in between as we go into July on Wednesday. If we stay in this range, this could give us good momentum push for July to be a good hot summer. All right. So with that being said, family, yeah, got any last questions about anything before we get off here? InvestFest. We got our tickets. We talked about them. I bought mine for $80. They doing a discount. If you don't want to wait, I'm gonna send a link in the chat. If you don't want to wait, they're doing a revolt 50% off all the tickets. So if you want to go VIP, if you want to go general admission, there's the code that you use revolt on the Earn Your Leisure website. Instead of buying the $250 ticket, you can get it right now for about 120 bucks. And that guarantees. So towards closer to Atlanta, um, the tickets that they might give me or I might get, they might be first come, first serve. But if you don't want to run into that issue or run into that problem, I mean, what's 125 bucks for 3 to 4 days in Atlanta around multimillionaires all day, every day, networking, getting your business all, learning from them, taking information from them, and just growing, bro. What's $125 being around millionaires all day, learning from them? And then we gonna have everything decked out. We're gonna have some events, the ecosystem stuff. We're gonna have some food, drinks for us as well. We're gonna go out, we're gonna go to the club and do all that, have a good time. We're gonna get some breakfast, kick it. We're gonna do all that. But if you do want to get that discount, you don't want to worry about or potentially hope to see if you're gonna get a ticket. Um, I mean, I would go in there right now, but put that ticket in, put that code revolt in, and I'll send that in the group as well. And then, man, we good, bro. Let's finish off June strong. Don't make no panic plays. We didn't get to talk about Netflix. I want to talk about them, bro. We got that to March of 2027. If you down 30%, 40%, I don't care how much you down. The reason why you buy time on your plays is to make sure that if something does happen like this, I got time for it to come back right and get back right. I got time for it to get back right. Right. And if you think Netflix is going somewhere, you tripping. Netflix is only expanding, they only growing. And if they only expanding and only growing, it's only a matter of time till they turn the thing around and now they back to the upside. You're gonna be sick that you was not even